So, hi everybody. We are here today with Dan Basse, our president of AgResource. Thank you, Dan, to be with us here on AgResource Brazil. We want to understand, sir, what are your views about this productivity that we are seeing on US about corn and maybe on the forecast of La Nina, and what are your thoughts about here in Brazil about this planting season? Maybe we're going to start with corn and then we can shift for soybeans.
Yeah, Rafi, thank you. Hello, everyone. I'm glad to be with you. You know, as we think about the U.S. growing season, that's now in the harvest phase. We've cut about 11% of the corn. We've got about 6% of the soybeans harvested now. We're starting to get some early yield data, which I think is pretty important. And the importance of the yield data on corn is that it's disappointing. We don't have a U.S. client today that is happy with their corn yields, and they kind of don't understand what happened. We did have the drought that affected the northern plains, North Dakota, South Dakota, Minnesota, and then we had dryness across portions of Iowa and Missouri. But it's really Illinois, Indiana, and Ohio, which is suffering from the yields. Now, as I looked at the crops, the corn stalk is very fragile. It's been disease laden. We've had blight, anthrax, tar spot, which is a new disease, a foliar disease in corn. We've had gray leaf spot. And so all of these diseases have kind of ganged up on the Eastern Corn Belt crop to give us a lower yield. Now, the last time I have seen something like this was back in 1995, in which we had gray leaf spot almost everywhere. And it caused about a 7 to 10 bushel an acre decline in the US corn yield. So with that in mind, AgResource has been cutting our corn yield estimates. We believe for the October report, which will be coming up around the 12th of October, that report will show a number somewhere around 173 bushels an acre. That is down about 3.5 bushels an acre from September. But by the final, we wouldn't be surprised that the final corn yield is below 170. That would be a decline of maybe 600 million bushels from what we originally expected. Now, that becomes very important because if I take the crop down below 172 bushels an acre, which is where we were last year, my end stock total in corn gets very, very tight. Something like, 7 to 800 million bushels. If it goes below 170, we start having end stock estimates with a 6 in front of it. Now, those kind of end stocks justify corn prices somewhere between $6.50 and $7.50. So, looking at corn here today in Chicago at $5.20 for a bushel, that looks relatively cheap, and any breakdown to $5.20 or under would be a good, nice buying opportunity. So, Rafi, for now, we're really focused on the U.S. yield, and we think that lower yield will give us a rally in corn, which should drag along the Brazilian market a little bit higher. Then we'll look for a selling opportunity for the Brazilian farmer, probably by the late in the fourth quarter, early in the first quarter.
Perfect, sir, perfect. And I think all Brazilians want to know also is for soybeans, this perspective is to follow these yields falling. And also, what are your comments about these new mandatory and the projection for 2022? What's your view about it on this soybean also for Brazil?
Well, as we looked at corn, we're still gathering more data. Soybean harvest is always behind about 10 or 2 weeks in the United States. We start with corn, then we move to soybean harvest. But as we look at the yield today, we've cut our yield estimate down to 49.5 bushels per acre. So we're about a bushel and 1.1 bushels below the USDA. Our thinking being is that disease and drought did affect the U.S. bean crop. So that's 0.7 of a bushel below last year. And that would give us a crop of around 4.275 billion bushels. Now, that's important because this year we're looking at usage of about 4.34 billion bushels. So end stocks likely will decline in our work to about 135 million bushels. That's the minimum that we have left. So it would tell me that, for now, corn's going to bottom between 12.25 and 12.50 relative to November Chicago. We could then look at a rally that could happen into November, December. And then at that point, the market could start turning lower as Brazil becomes the cheapest source of supply and China shifts its buying southward. Now, in terms of La Nina and what our climate scientist believes, he believes that the second year of La Nina produces more dryness and drought through far southern Brazil and Argentina. So we're kind of focused on that area, December, January, and February. There will be a delay in plantings. We don't think the real good solid rains show up for northern and central Brazil till the middle of October, but that's still within the window of timeliness. So I'm not seeing a big problem for planting, but I do see a problem for Argentina, in particular southern Brazil, as we look at the December, March timeframe. So that's what we'll be focusing on that, Rafi.
Okay, so okay. I think one additional question also about prices. The producers here are worried about the costs and the high costs also for 22 and 23. And with this still potential high on prices for 2023, what could you share with us, your vision for the producer? Maybe start do some projections and try to hedge these costs. What do you think? And we can share with us about it.
Yeah, the cost structure, whether it's potash or nitrogen or any of the chemicals, very high. P, N, and K are extremely high, 80% above where we were a year ago. And so that really hurts, and it hurts most particular to the corn farmer, the maize farmer. He is going to be having a bigger bill, maybe over $1,200 an acre as we calculate it, for planting corn in the upcoming season. So we believe that that will cut corn acreage next year and probably expand soybean seedings, both in Brazil and in the United States. We at AgResource believe that the US farmer, because of these high costs, will not bring in that less productive land. We call it fragile land, which maybe is a pasture or a hay ground. That will not come into production because the farmer's not going to spend as much this year. So remember our theme that this is a multi-year bull market driven by Chinese corn demand expanding, but also renewable diesel here in the United States. So because of those two drivers, we just can't buy. The world needs to plant an extra 10 or 15 million acres in the next 2 or 3 years. I just can't find that acreage at these kind of expenses. So the market needs to stay high, Rafi, and buy acreage going further. And I think that's why the bullish trend will be with us with great volatility going up and down. But overall, I don't see a big break in the market relative to these very high costs to plant soybeans and corn.
Okay, sir. And about the interest rates there in US, I think another additional question here. We got stable on the report today, but any comments about it? We are seeing some talking about tapering, and that's coming near. And what are our view, and what's the points that we can share with the producers here in Brazil that maybe get some movements around on the market here on the prices with this shifting and increasing these interest rates?
No, Rafi, it appears that the Fed will start tapering, we think either in November or December on their bond purchase program. And then maybe by the middle of next year, we could see the Fed start to raise interest rates off of zero. So that would be bullish to the US dollar. We are seeing the dollar appreciate here short term. We do have this problem in the United States called spending. In the Congress right now, we have another $3.5 trillion proposal on infrastructure spending and a conciliatory note. But we'll see how that goes. It's hard to forecast politics in the US right now. But I do believe that rates will be moving higher with time, slowly. It's not a big change, but it's enough probably to keep the dollar propped up against the real. The US economy is doing really quite well. We have inflation rates running at 5.3%. GDP this year should run close to 6%. So we are really seeing a lot of action. But we're also seeing inflation creeping into the wage sector. And I think that's our biggest concern, in that finding laborers, finding people that will take a job at a smaller salary is difficult. And so that wage pressure will keep the inflationary natural rate of inflation probably between 3 and 4% compared to the 1 to 1.5% where it was the last decade.
Perfect, sir. Excellent as always, and your participation here is also essential for us here in Brazil. And also, I would like to take this opportunity and communicate to our producer, our client, our partner, that we might have you here next year with us in person in Brazil, doing some crop tours and doing some events, and also talking to the farmer and the partner here in Brazil. Yes, sir.
I look forward to it, Rafi. It'll be a great time, and I'm always happy to leave Chicago in the winter.
Okay, we will bring you here and see all the heat season, and let's keep on going with this participation and this video here in Brazil. Thank you, sir. Thank you very much. Thank you for everything.
Well, thank our clients in Brazil and the United States, and we see exciting markets ahead for the next couple of years. So it's our job to help you make better decisions. Thank you, Rafi.